Good morning, it's the 23rd of March 2010 and this is your daily outlook. Europe is divided as to how and when to help Greece. Yesterday's trading had no major announcements other than commentary from a number of central banks. The main driver yesterday was risk aversion due to a divided Europe as to if and how they are going to assist Greece. We also had a round of statements by various Fed members. Initially, Fed President Lockhart believes that the impact of ending the MBS purchases would be minimal. Following this, Fed Bullard reiterated his opposition to the extended period rhetoric as it boxes the Federal Reserve. Equities closed up 0.41% yesterday, whilst the two-year US Treasury yields traded between 1.01% and 0.96%, and the dollar-yen traded between 89.81 and 90.76. In Europe yesterday, the battle for Greece continues as EU Commission President Barroso was fighting to secure an agreement for Greece, whilst German Chancellor Merkel was saying that aid to Greece can only be as a last resort measure. She also said that since Greece has not even asked for financial aid, discussion on the matter is inappropriate. Trichet spoke yesterday also and was commenting on the possibility of an EMF being established. However, he said that to kick a member state out of Europe is legally impossible. We also had confirmation by Greece that its fiscal deficit was 12.9% of GDP for the 2009 year end. Euro-dollar price action yesterday was between 135.68 and 134.63. In the UK, we have the CPI figures today for the month of February. The reading is expected to be weaker than the prior month's reading at 0.5% month on month and 3.1% year on year. The Bank of England inflation target is 2%, and the current jump in inflation is one of the main reasons as to why the sterling dollar is back above the 150 level. The current situation in the UK makes it difficult for speculators to predict the Bank of England's next step. On the one hand, a weak economy with fiscal strains may encourage further quantitative easing to bring down yields and spark some growth. On the other hand, the high CPI rates above the bank's targets may encourage them to maintain a steady monetary policy and tame inflation. Sterling dollar price action yesterday was between 149.28 and 151.10. Today, the market will turn its focus towards the UK CPI reports, where a 3.1% year-on-year number is expected, well above the Bank of England target of 2%. We also have the CBI realised sales index expected to come in lower than the previous month at 18. In the US, we have the Richmond Manufacturing Index expected at 5, and Treasury Secretary Gaitner will also be speaking before the House of Financial Services Committee today. Currencies to watch out for: the euro-dollar and dollar-yen. The euro-dollar pivot point is at 135.70, with a preference to enter into short positions at 135.60. The dollar-yen pivot point is at 89.90, with a preference to enter into long positions at 89.95. Today's calendar and market movers: UK CPI for the month of February expected at 0.5%, UK CBI realised sales for March expected at 18, US Richmond Manufacturing Index for March expected at 5, and US existing home sales for February expected to come in at 5 million units. Now on to equity markets. US equities closed positive yesterday, with the Dow closing at 0.41% and the SP 500 at 0.51%. The European bourses were mixed yesterday, with the FTSE down 0.10%, the DAX positive at 0.08% and the CAC closing positive at 0.07%. At the time of writing, the Nikkei was at minus 0.47% and the Hang Seng at minus 0.65%. This has been your Daily Outlook. I'm Emma Andrew from the easy-forex dealing room. Have a good day.
Not only have you found a great place for Forex news, you found a great place to trade it. Registration is easy. Just click Join Now. Membership has its unique benefits, such as the freeze rate, the trade simulator, the inside viewer, and personal dealers. Your personal account manager is waiting for you now.